Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Nejan with me, Shel Bhatnagar, our markets editor. Well, Indian markets are all set to bounce back on Tuesday, but where are the pockets of opportunities and what should be your strategy? We'll discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to enjoy a strong bounce on Tuesday as strong overseas cues enthuse bulls on the Lal Street. Traders and investors may take advantage of Nifty's 4 month lows and buy beaten down stocks ahead of major festive demand in the economy. Former market favorites, the PSU pack, will come back onto the buyer's radar as traders may punch stocks that gave strong returns in the previous months. Watch out for rail, defense, banking, and metal PSUs. Good morning, Shell. It's a fresh Tuesday morning. And, the good news is that GIFT Nifty also indicates a positive opening for the Nifty. And yesterday, also, if you see, there was a good pullback when it comes to Dalal Street. So I want to understand from you now that what should be the strategy at this point in time and where do you see Nifty?
Good morning, Tanya, and a very, very warm welcome on this excellent Tuesday morning to all our viewers who joined us from different parts of the globe. So, Tanya, let's be very clear. Today is a good day for various reasons. One, it's a Tuesday. So, Mangalwar hai to Mangal hi hoga. Two, we are getting very strong cues from overseas, a very strong bout of short covering coming on the Dow Jones Index, the Nasdaq, as well as the S&P 500. All three of them are corrected 10% from their all-time highs. Therefore, there was a sharp uptick. Now, we closed nearly at the day's high yesterday, 19,140, up 93 on the Nifty, and 257 points higher, 43,040 on the Bank Nifty. Given this, the strong overseas cues that are coming in, and most importantly, Tanya, today is October 31st. It is the last day of the October month, and there will be a lot of mutual fund activity that will help the Nifty on its way up because mutual funds will want their NAVs to also shine as much as possible on the last day of the month. It's the tracking day in which you decide how your fund has performed during the day. Given this background and the fact that crude oil is quiet, given that the US 10-year bond yield is quiet, and most importantly, Tanya, there is a huge, huge short covering from bears happening at 19,200 level in the Nifty options chain. So if I were a smart trader and if there is an immediate dip in the market in the beginning, I would generally try and be on the long side as far as the Nifty is concerned. The risk reward ratio is now firmly, as far as the markets are concerned, in the favor of bulls. We've had two smart days of rally after a terrible week, and we should see the momentum continuing. Fresh resistance on the Nifty is now at 19,250 and 19,300. Very, very fresh, strong supports coming in at 19,100 and at 19,000. So this is the overall picture of the Nifty, Tanya. I see a very nice bounce back. We should see 19,200 fairly soon.
Okay, absolutely got that. That's the verdict on Nifty. But let's discuss Bank Nifty also, Shell, because Bank Nifty opened this week with a gap down after a relief rally on Friday. So, what are the fresh support and resistance level at this point in time, and what are you looking on Bank Nifty?
So, Tanya, the mood is the same as far as Bank Nifty is concerned. You should see a nice bounce back. The only problem with the Bank Nifty is that it had fallen so much that it was below 200 EMA. So the resistances on Bank Nifty are very, very strong. At the moment, you'll see a very strong resistance coming in at 43,500 and at 43,400. Now, what is very, very interesting is that there is a mild unwinding of calls at 43,300. So a 250, 300 point uptick is likely on the Bank Nifty options chain. And remember, tomorrow is the weekly expiry of Bank Nifty. So that will also be something that needs to be looked at. 1st of November, we are on T minus 1 for Bank Nifty. It expires every week. So a short covering could possibly be seen. 43,300 is possibly in sight if you look at the Bank Nifty option chain, and very, very strong supports. Fresh supports are coming in on 42,500. You are seeing very strong support at 43,000. So that's how the structure is. 43,000, 42,500 is the support level, and very, very strong resistance now at 43,400 and 43,500. But unwinding of calls happening at 42 at 43,200. So that's how the structure is as far as Bank Nifty is concerned, Tanya.
Okay, absolutely. So the support levels are 42,500, 43,000, and the resistance levels, they are 43,400 and 43,500. Okay, that was Bank Nifty for you, but let's discuss FNO space as well. Lots happening there as well, Shell. What are you looking at in the FNO space today?
On a very, very rare occasion, Tanya, today, and we'll first start the discussion with Reliance Industries. It's the second
Hmm.
heaviest weighted counter on the Nifty, and we saw a very sharp move yesterday, 2.1% higher, which was accompanied by a drop in open interest, which means short covering. Remember, the first stock that we discussed yesterday was Reliance Industries, post a fantastic set of numbers which were announced over the weekend, and the stock is at a 6 month low. So a very sharp bounce back is happening there. And that's how the markets are structured. Reliance and the other stock is Cipla. Again, earnings 1.4% higher yesterday. A downtick of over interest to the extent of 8.4%. So very, very strong short covering. Both these stocks are the ones that you should look at as far as the long side trades are concerned. Again, all views on the Nifty, the Bank Nifty, Cipla, and Reliance have to be either check with an independent financial advisor should you take a position on the long or the short side. These are all based on data and technical charts which are easily available in public domain.
Okay, absolutely. And, Shell, it's a big week for global markets as well. All eyes are now on the US Fed's FOMC meeting. And, Wall Street that rallied on Monday, all three major US stock indexes closed more than one up. They were up more than 1%, bouncing back from the previous week's sell-off. S&P 500, if you see, that was up to the tune of 1.2%, out of the correction territory, and Nasdaq also was up 1.16% at 12,789. Dow Jones also 32,928, up around 1.5% in its best day since early June. Oil prices, if you see, Shell, oil prices also dipped. Global benchmark Brent was down 2.8% at $87.89 per barrel. Gold prices hovered around the key $2,000 level on Monday. But what is now essential to track from all these overseas cues?
So, Tanya, three things. One, we have had a short covering on the three major indices on Wall Street. And as you very
Hmm.
rightly said, people will wait for Wednesday to sort of take a view on what the US Fed has said. The main thread in the market is that the pause will continue, and the US Fed will make regulatory statements on how they see the economy. But there is no number which sort of helps the US Fed to pause continuously or drop rates. So the problem in the US market will continue, and therefore you see it in the 10% correction zone from its record high. 1 or 2 days of bounce, and then Wall Street will again sort of tread water. So that's how I see. Crude is quiet, gold is quiet. It's consolidating about $2,000 an ounce, simply because the main geopolitical event in the Middle East has happened. Israel has begun its ground invasion into Gaza, and now much will depend on the outcome. So everything is behind us, which was bothering the markets over the last 2 or 3 days. I had mentioned this in my commentary yesterday that once the ground invasion starts, people will then give a sigh of relief. Sad as it is, but the markets look at these things very differently. So that event is over. The outcome of the event will happen whenever it happens, and then we'll start reacting to it at that point of time. But so far, everything is in a Goldilocks moment for global equities today. We are most likely to see an upturn. Tanya.
Okay, absolutely got that, Shell. And with that, it's time for us to now welcome our market guest on the show. We have with us Mr. Dharmesh Kant, who is the head of equity research at Chola Mandalam Securities. Good morning, Mr. Kant, and always good to have you on BT TV. Let's start with the outlook first. We saw a good pullback yesterday on the Lal Street, but I want to understand from you that what's the situation looking like to you in the near term, and how should we really approach the markets at this point in time?
Yeah, good morning, Tanya. Good morning, Shell, and to all our viewers. See, situation remains fluid. I mean, geopolitical issue is still there and it has not gone away. The only silver lining has been that there has not been any supply disruption because of this ongoing conflict in the West Asia. So expectation was that if the supply disruption happens, then again we will be back to same Russia-Ukraine like a situation where, because of supply disruption, the inflation and everything picked up and the economies of scale went haywire for most of the companies operating in different geographies of the world. So, which doesn't look likely. It looks like more of a localized kind of an event. So, having said that, and now moving on to the earnings season, US earnings has also been very strong. Particularly the financials there have been reporting very strong set of number along with the technology companies which have been into the chip manufacturing or the AI platforms. So they have been doing particularly well. Coming back to our country, India, if you look at the companies which have reported earnings so far, so we have tracked around 115, 116 companies till last Thursday or Friday. So on a reported PAT basis, we have seen a growth of around 33% on an aggregate level on a year-on-year basis, and this is around 9.5 to 10% on a quarter-on-quarter basis. So sequential growth is phenomenal. At the same time, YOY growth has been phenomenal, primarily driven by the banking and financial space, where this growth has been phenomenal of around 40% on a Y-on-Y basis and 16% on a sequential basis as well. If you look at XBFSI, 75 companies were there. Again, the growth has been 18% on a year-on-year basis and 2.5% on a sequential basis. So numbers are excellent. The pockets which were expected to do well have done well. And the pockets where the concern was there, like IT space, that concern remains as it is. So if you narrow down to the earnings growth trajectory for Nifty EPS, we expect it to be around, say, 30% kind of an EPS growth this quarter. For the year as a whole, 22 to 23% growth is likely to be on the EPS. So that's a very strong set of EPS growth which we're expecting. So any correction is likely to be bought into. The only caveat is this Israel-Hamas thing, if it goes into, spirals into something which is being feared of and it leads to some more geopolitical disruption and supply disruption, then there is a problem. Otherwise, I mean, US Fed rate and all these things will come and go, but it's a buy on decline kind of a market.
Good morning, sir, and welcome to Market Today. What are the one or two stocks in the large cap or the mid cap space you think merit a simple buy or an SIP mode kind of a purchase as far as markets are concerned as of now?
Yeah, good morning, Shelly. I think this is a time, though the small cap has rallied very ferociously after this recent correction, and they are the ones to pull back fast. And the numbers have also been great, but one has to be very, mindful of the cherry picking out there. For SIP mode, I think the best stock to my mind in the present scenario and looking forward for the next 3 years is Reliance Industries. The numbers were phenomenal. All the verticals sounded well, and one should, when you are looking at Reliance Industries, you should not be looking at oil to chemical business, even if it sustains at present level. In fact, in our model, we have given a 5% discount to the earnings of oil to chemical segment by FY26. So it would be lower than what it has been reporting today. But oil to gas has been phenomenal out there. It has been growing by leaps and bounds, followed by retail and GA platforms. So our own sense is that by FY26, our net profit reporting on a console basis would be around 1 lakh 5,000 odd crores, and the ROE will improve to 10.5 to 11%. So having regard to that, even if you give it a 20 PE multiple, so 20 lakh crores of market cap of Reliance Industries comes out. And as of now, it's trading at around 15.5 lakh crore for market cap. So 25% upside is there. And it's a very safer bet. And we have not taken into account the clean energy business, how it's going to pan out, and what would be the value unlocking out there, and the value unlocking of different verticals when the demerger happens. So that has not been taken into a picture. At the same time, operating leverage, because most of the capex they are through with for the 5G rollout, and the higher tariffs of 5G rollout would be rolled out in this Q3 and Q4 going forward. So all those benefits are there. Data usage is growing very fast. So retail expansion has been mammoth, around 18,650 stores they have on a pan-India basis. So this is a stock where you cannot go wrong. I mean, if things are as normal and as usual, business as usual, and it offers you a huge margin of safety. So, Reliance Industries, we have been recommending to our clients, and I think that's the safest bet in the current environment to hang on to on a SIP basis.
Well, that is one of India's most well-known stocks, the largest and the best profit machine that we have seen on the Nifty for several decades, and of course, the second heaviest weighted counter on the Nifty. Reliance Industries, for you, ladies and gentlemen, just the right time to start a SIP, according to Mr. Kant. And the prices are also wonderful. The price that you see on Reliance is the lowest since March 2023. So it's a 5-6 month low on the charts. And the fact that earnings were fabulous, announced over the weekend. And yesterday you saw a very strong bout of short covering. So the tailwinds are behind this. One should do a sensible sip in this counter, according to uh, Dharmesh ji. The other point I wanted to ask from you, sir, is that for the long-term investors, we've seen markets correct sharply, both domestically as also overseas. Will this be a good time to maybe start another SIP in a good diversified equity fund, or maybe add a fresh SIP on a monthly basis to your existing mutual fund investments?
Definitely, Shalji, SHIP is the only option given the context in which the market is pleased as of now. Because going forward, see, earnings are fabulous, so that gives the flow to the market. But the point is that we are heading into an election year now. So first there will be 5 state elections, which will be beginning at the end of November, and then we have a central election playing out in next year. So, and then you have a US election also playing out next year. So I mean, there are a lot of political policy related issues which will be addressed. Hopefully, if the present continuity of the regime is there, then there won't be many disruption out there. But this will keep the tentative bias on the market. To my mind, the market, both upside and downside is now being capped. On an upside, I don't see Nifty crossing 20,000, 20,500 till all this uncertainties are cleared out of the air. And on the downside, maybe 18,000 or 70,500 at the worst case scenario. That is the floor at which. So in this oscillation, if SIP is the method, that is the best way to, pass through this journey. And then the diversified equity funds, primarily focused on mid and small cap areas. I would still, go with the mid and small cap basket because there the traction has been phenomenal. So the earning growth has been there. Most of the companies have taken up capacity expansion, and the good part has been it has been met through internal accruals rather than going for a debt route. So a mix of growth fund where it is more of a mid and small cap, and maybe a small portion, maybe 20 or 25% allocation, you can go for the large cap fund. But even there, the bias should be on financials and power space, power and infra. So these three sectors, if the weightage is more in the fund, so that should be preferred rather than a vanilla kind of a large cap fund.
Okay, absolutely, Mr. Khan got that. And let's discuss Bharti Airtel also. The company will release its second quarter numbers today. So, according to experts, Bharti Airtel is likely to post industry leading revenue growth, led by higher wireless revenues and subscriber addition. So, what are your thoughts on Bharti Airtel and what should be the right approach ahead of its numbers?
See, I mean, the stock has already rallied and it's trading at fair valuation multiple. So, the
Hmm.
scope of further re-rating is not there. At the same time, for Bharti, it's more of an African business, how it is going to pan out. What are the ARPUs, what's happening out there is more relevant than the domestic Indian business. Because in India, now it's a play between two companies. One is Bharti and the other is Reliance Jio. And fortunately for both the companies, when the last Jio was launched, the ARPUs came to as low as 125, 130, which is back to 180 kind of levels. Last quarter for Bharti, management has guided an ARPU in excess of 200 rupees by the end of this financial year. So one needs to see whether that guidance still is intact and there is no downward revision to that guidance. So one has to look carefully into what the management has to say about the Indian ARPUs. And if they are holding on to the guidance of, say, 200, 205 in the near future, so it's a good, stable kind of an earning environment where one can hold on to. I would not suggest to have a fresh into Bharti Airtel because the African business is still not picking up the way it was anticipated. So that remains a drag out there. And I mean, a better option again, as we discussed earlier in the show, Reliance Industries remains a better option, even if you have to play the communication space through the Geo platform.
Uh, Dharmesh, we've seen a very, very strong move coming in on Gujarat Narmada Valley Fertilizer Corporation. This is a state level PSU run by the government of Gujarat, GNFC. The last 2 days, in fact, the last 1 month has been fantastic for the counter. 684 and a very nice breakout that was supported by volume yesterday. 32 lakh 84,000 shares traded. Would you have a view on GNFC fundamentally?
See, all the fertilizer companies have done pretty well. One was because of the lower input prices, and secondly, the monsoons finally panned out almost near to normal kind of a level. So, monsoon is very critical for these fertilizer companies because the moisture in the soil is critical to fertilizer being absorbed by it. And if the monsoons are normal, the more usage of fertilizer is there. Contrary to the general belief that fertilizer would be needed when the monsoon is not there, it's the other way around. So that volume pickup has been there on for all these companies, and at the same time, the valuation discount was too great. I mean, when the times are turbulent or the volatility is there, uncertainty is there in the market, what you are looking forward to is stability of the earnings, and at the same time, the valuation comfort. So still after the rally in all these fertilizer companies, still the valuation comfort is there. But at the same time, they are not, I mean, multi-baggers or, continuous compounders on the top line. So that is where the entire, selling comes into play. For a trading play, if one is holding and was lucky to get early entry into these kind of stocks, so they can continue to do so and no need to sell as of now. One can wait for at the end of the season. And I think 15-20% kind of an upside ride is still there. Nothing negative about these companies. But at the same time, for a long-term portfolio buying kind of a horizon, I would not be, recommending that. The other case in point was where, the buyback or the dividend options which comes through these companies, and there is a policy shift in the Gujarat government where they have recommended to do so. So that also becomes a interesting trigger for getting into these stocks. But I think most of them has largely played out. It's now a time to hold and ride through the gates for maybe 15-20% and then book out.
Okay, absolutely. It's almost pre-open time, Shell. You want to take it away?
Yes. Yes, Tanya. And I just love the tick on the Nifty, although I know this will not happen. It's 487 points higher at 19,628. I so wish this were true, but we'll see this settle to sensible prices shortly. Let's take a detour to what the top index heavyweights are doing at the moment. The Nifty is unreasonably high, although I so wish this were true. Uh, we'll let these prices settle. I see a good one on Bajaj Finserv, down 0.7%, 1550 in front of me. And I also see Axis Bank. Let's start with State Bank of India. It's 0.5% higher at 568. And let's see some other prices in the FNO zone till Nifty reaches sensible, practical prices. As far as the FNO is concerned, you see Marico down about a percent, 526. More weakness creeping into UPL, 1% lower, 533. I have Mahanagar Gas flat at about 1018. We have Britannia and Godrej Consumer Products from the FMCG pack bleeding about 0.5% and 0.4% respectively. Mild downtick there. Colgate at record highs is down 0.5%, 2045. And let's look at the top gainers in this space. Okay, yes, one sensible stock, Petronet, at about 214 rupees, is showing an unreasonable price uptick of 6% higher. Let's see whether these prices settle sensibly or not. But 227 points higher on the Nifty, 19,378. If this were true, Tanya, there will be a very strong bout of short covering. Remember, I had mentioned that at 19,200, you see a lot of call unwinding happening. That basically means that bears were covering their short positions and letting the Nifty breathe higher and higher. But if this is a gap up, then those bears will scramble to cut their positions more aggressively, and that will again cause a short term rally. Let's hope for sensible prices to come into sanity. But at the moment, it seems 200 points higher on the Nifty. 19,350 is what we are looking at. Let's look at FNO stocks. And again, prices are substantially higher. Cholamandalam Finance 9% higher, 1262. MMTC 5% higher, 57. Let's look at the PSU pack. How are they trading in terms of percentage rise? MMTC is the top gainer. We will avoid talking about it. 5% higher, 57. Engineers India 2.5% higher, 130. Oil India 2% higher, 309.80. BEML 1.5% higher, 20,042. UCO IOC Union Bank up between 1.3 and 1.2%. Okay, Nifty still heavily in the green, now 135 higher at 19,276. So 19,200 will be the fresh battleground, Tanya. That is what pre-open trades are telling us. Tanya, anything that you've watched, and then we'll again go to Mr. Kant.
I think Shell, I want to see what TVS Motor is doing because the two and three wheeler company that has recorded a standalone profit at 536 odd crore rupees for the second quarter, and that is up around 31% on a YY basis. Revenue is also up to the tune of 13% on a YY basis to 8,145 odd crore rupees, and we can see a good uptick on this particular counter. 1660 is the level. Mr. Kant, coming to you for TVS Motor and of course the auto space. This space is in focus because of the festive season. So, what should be the approach and what should be the right strategy for TVS Motor?
See, Tani, all the automobile companies have been reporting a very strong set of number, and the good part is the margin improvement has been the most happy surprise out there. So, be it Maruti, Bajaj Auto, TVS Motors, they all have reported good margin improvement, operating margin, and this is led by not only the better capacity utilization but the benign input prices which is there. And the best part about it is that input prices are still low, so they have not risen so far. Most of the management commentaries has been strong, and they have guided for overall recovery into the two-wheeler, three-wheeler, and four-wheeler segment, particularly into the domestic market. For the TVS Motor and Bajaj Auto, the overhang was the export side of the business, which was not picking up. But it's likely that given the guidance by the Bajaj Auto management was there, that they are seeing pickup in the overseas market as well. So TVS Motor coming back to it, I mean the numbers were excellent. This morning definitely there would be a good gap up opening playing out there. But the right approach for approaching all the automobile manufacturers is go for a basket buy. So keep Bajaj Auto, Hero MotoCorp, and TVS in the basket on an equal weighted basis if you are solely focused on a two-wheeler space, and ride this basket for at least next 3 months. So this festive season, the guidance is around high single digit kind of a volume growth, which was not there in the last month. And at the same time, with margin improvement playing out and the operating leverage playing out, I think there is enough scope for around 15-16% kind of an upside going forward from here. And then before the election, general the trend is you see a lot of two-wheeler sales happening just before that, and it will coincide with the marriage season again. So a good trending buy can be expected from these three companies. Launches are already there, be it BMW bikes or the Triumph for Bajaj Auto and a Harley for Hero MotoCorp. All this will again play out. So that's a call out there. And the four-wheeler space, again, you can go for a basket buy for Maruti, Tata Motors, and M&M. So club all these three together and go for that. So both the spaces, I mean, the entire space is looking quite hot and buzzing, and it's a buy on a, again, as Selji has pointed out earlier, it should be a SIP kind of a method for next 3 months. Keep on buying the declines and please hold it for 6 months. Decent returns can be expected out there.
Okay, so Tanya, there are some sensible prices coming back on the pre-open trade. At the moment, still up 92, and this is really, really heartening. Nifty is at 19,232. So I was on a very conservative side, thinking we'll have a 30, 40, 50 point uptick towards the day's close. But we are opening at the moment gap up of 92. That means two definite things. Very, very short, very, very strong bout of short covering will be seen. And in terms of options, let's look at it this way. At 19,200, the option price is at 71 rupees. This is Friday's close. This will open gap up at least by about 50 rupees, and then on will start a further rally. So we'll keep an eye on the Nifty call option of 19,200 expiring on 2nd June. It ended at 71.35 rupees, 17 rupees higher on Monday. There will be a gap up, and then let's see how this option performs. I think it's going to be a very bad day for bears. They are going to get mauled on the Lal Street, at least in the first hour of trade. If this gap up is sustained, then things will look dramatically better for the Nifty. And Tanya, at this stage, what will make sense is the advice that we shared on Thursday and Friday, SIP in the Nifty ETF. When it has corrected 1,200, 1,400 points, always pays off handsomely, even in the short term. Tanya.
Absolutely, Shell. Golden words coming in as always. But let's pull up Marico also. This stock will be in focus as well on the back of the second quarter earnings. And the company has reported 17% YOY jump in its profit at 360 odd crore rupees, and 532, that is the level right now in the red, 0.04% downtick there on Marico. Mr. Kant, coming to you for Marico, what should be the right approach after the numbers, and any stocks that you like from the FMCG pack?
No, I think FMCG pack with the numbers, the volume growth has not been great. And in bits and pieces, like Nestle came out with a better set of numbers, but the expectation of 6 to 8% kind of a volume growth, which was there before the earnings report was there, it is below single digit. Going forward, I don't see it picking up in a much bigger fashion. And the way other sectors have been reporting earnings, so they are much better placed. So this is not a time to look for defensive companies. I mean, 5-10% kind of a stock price gain one should not be looking at this juncture, because the fundamentals have been pretty strong. The only thing is because of the international geopolitical issue and uncertain climate, we are seeing the volatility, and this volatility has to be used for buying into aggressive companies which have been reporting better set of numbers. So FMCG we have completely avoiding as of now as a buy space. We are purely focused on banking and financial and automobile. Followed by infra is also looking very attractive. Cement is another space which looks quite buzzing, and then railway infra followed by defense. So these are the five six sector where the focus has been for cherry picking and the basket buying. And the method is now for next 3 months is again a staggered manner of buying approach rather than putting all at one go into the basket.
Let's look at pre-open rates now. 911 is what is in front of us. The Nifty is, of course, settled at a gap up of 92 points, and this will take out the first resistance on an intraday basis, which was at 19,220. What are the prices that are ticking in the green? Tanya, another good news. All 10 stocks in the index heavyweight category are in the green except for ITC, okay, which is the top gainer. HDFC Bank. Okay, it's going to be a blowout day today, a gap up, and that gap up is most likely to be sustained. 1.27% higher in HDFC Bank, 1504. Axis Bank, 0.9% higher, 998. Bajaj Finance, 0.9% higher, 7570. Nifty Bank has settled 300 points higher at 43,356. Reliance, 0.7% higher, 2328. So this is how the structure is. I'll immediately look at the FNO space also. And pretty light. Remember, this is a stock we discussed last week. 10 days of losses. 2.2% higher at about 2364. Tata Motors, the company's won an arbitration order of about 800 crore rupees from the West Bengal government, up 2% at 643. Hindalco, TVS Motors, IDFC First Bank's SBI card, all of them sharply in the green. So we'll look at a nice uptick today, Tanya.
Okay, absolutely. Got that, Shell. And I think some of the stocks will be in focus ahead of their second quarter earnings. So, Mr. Kant, we have a lot of companies that will be reporting their numbers today, and one of them is Tata Consumer as well. Though we have discussed FMCG, but would you like to share your thoughts on Tata Consumer?
Again, a stable set of earnings is being expected out there, and the footfalls into the Starbucks and how that side of the business is doing would be more critical. I think other than that, the other businesses of Tata Consumer would be business as usual. No surprises out there. A stable set of 12-15% kind of and profitability growth and with stable margins. Though there may be slight margin improvement because of the operating leverage kicking in and better utilization which has been there. And if you look at Starbucks trajectory for the last 4 5 quarters, they have been doing pretty well, and which is adding to the profitability of Tata Consumer. So net, I don't see any negative surprise out there. The stock has already risen and it's expensive given the type of valuation multiples it is trading at, and it's likely to remain so. I mean, we should give it a pass for as far as trading or investing buy is concerned. But don't expect any negative earnings update from there. 15 to 12% is what we are expecting on the profit side.
Okay, it's 9:14, and we are waiting for the first ticks as far as prices are concerned. Let's look at how the markets are likely to open. Again, as I pointed, a very strong gap of 19,232. The 19,200 call is what I'll look at, and let's see how the markets remain structured today. Okay, we have the first tick, ladies and gentlemen. It's at 19,203. 68.52 points higher as far as the bank Nifty is concerned. The bank Nifty has opened 145 points higher, 43,171, and very strong moves coming in initial trades. Let's look at HDFC Bank to begin with, and Reliance Industries. 0.5% higher, 1493. Reliance is 4.3% higher, 2320. I just want to look at what is the Nifty 200 call doing at the moment. We have just a moment, please. Let me just refresh this data. 19200 still, I don't have the rates. So a bit of a slip. This is because all those people who had carried over long positions yesterday at close are now closing them. So you are seeing profit booking. That is why the day's high of 19,230 is now at 19,202. This is a gap of about 58, 59 points. Let us see how it sustains. Let's look at some other winners in trade today. At the moment, we have Infosys 1379, 4.2% higher. Reliance 0.5% higher, 23.23. Let's look at FNO stocks. Top gainers, Pidilite, 3.9% higher, 23.96. National Aluminium 1.7% higher, 93.65. Let's look at the PSU basket. I'm sure this is where you'll see the maximum gains. Okay. We see Union Bank 1.9% higher, 2% higher, 10175. National Aluminium 1.8% higher, 9375. GNFC taking it up at 692, 693.35. Masgaon Docks again 2000, 1.5% higher. Very, very strong moves coming in the entire market. Nifty at 19,183. It's a mild slip below 19,200, but that is a level that will be taken out today. How about high beta space? Okay, which is the top gainer here. Uh, we have a strong move coming in Hindustan Construction, 2.5% higher, 2665. Paytm, 1.5% higher, 936. BHEL, 1.2% higher, 122.25. HBL Power, PNB, Canara Bank, all in the green. The Nifty, 52 points higher at 19,194. Let's look at the broader markets before we get to Tanya on what is she observing. Very, very strong move. The advanced decline ratio on the National Stock Exchange is 1,500 shares in the green, just 250 in the red. So it's a 7:1 of an advanced decline ratio. And in the NSE 500, 431 shares are in the green versus 67 in the red. The advanced decline on the Nifty is 42 shares in the green and 8 in the red. Tanya, what are you observing?
Shell, we'll come to that, but first let's welcome Mr. Sudeep Shah. He's also with us now. He's the Deputy VP and Head of Technical and Derivatives Research at SBI Securities. Mr. Shah, very good morning to you. And how do you look at the market opening and any top trades that you would like to recommend to our viewers? Could you please unmute yourself, Sudeep?
So sorry. Yeah, so sorry. So first of all, good morning to you and all the viewers. See, markets like we have seen, it has rebounded from 18,830, which was the 200-day exponential moving average, and now it is roughly around 350, 380 points. So from the current levels, I feel that the important support zone would be 19,080 to 19,100. Until this zone holds, we could see the extension of this up move in the next few days up to 19,260 to 19,300. Now remember, 19,300 is the place where there is significant call writing also happening. So this could be a important resistance on the way up during this process of rebound rally. So we need to be a bit cautious around that zone. Now Bank Nifty also from the lows of 42,100, 42,200 has rebounded a good 1,000 points. And now for this rebound rally to materialize further, we feel that important support zone would be 42,850, 42,900. And till the time these levels hold, the up move or this reversal move could continue up to 43,400, 43,500. Now, around 43,500, there is significant call writing also happening. So one needs to get cautious, start getting cautious around 43,450, 43,500 zone once that move comes. And we feel that this rebound rally could last up to that zone because yesterday we have seen Reliance, HDFC Bank, ICICI Bank, Kotak Bank all showing signs of reversal from important support zones. And first rebound rally always comes in large caps and then mid caps, because yesterday mid cap and the small cap did not perform, they were flattish. So it was just the large cap show, and we feel that this large cap move could continue for the next few days also. So all in all, 19,080 to 19,100 could be important support for Nifty from here on. And 42,850, 42,900 zone will be an important support for Bank Nifty from here on.
Okay, absolutely got that, Sudeep. And any top technical bets that you would like to share?
Uh, See, there are a couple of stocks that I feel could do well from here on. One is from the CPSE space, that is Coal India. Now, Coal India in the last 2 3 months has seen a magnificent up move from 230 levels to 310, 320. And even in this last corrective move in Nifty, where Nifty corrected over 1,000 points, we did not see Coal India even correcting more than 4 5% from higher levels. So, and once again, it is holding its 20-day exponential moving average since the 1st of September. So, even during these intermediate corrections, the shortest moving average also has not been broken. And once again, the stock has taken support from 305, 307 levels and is now rebounding on the way up and at the cusp of making a new high also from here on. So I feel from the current levels, 305, 307 could act as a strong support until this zone holds. Up move up to 330, 335 in Coal India could be on the cards for the next few sessions. Now, the second stock that we like is Exide Industries. In the last few days, we have seen a good short covering move in Exide Industries. Now, the stock had corrected from over 270 levels to 241. And the last four sessions, we have seen a higher top, higher bottom formation. And also, the stock has come back in that old trading range of 250 and 270 on the upside. So it had broken this, and once again now it has come back in that range. So we feel that from here on, Exide Industries could continue making a higher move on the upside, and 251 could act as a stop loss, and we could see higher levels of 268 to 70 in Exide.
Okay, a
Okay,
fairly
absolutely.
strong move on the Nifty. And Tanya, two interesting things have happened, which are the gap up that was there has been to a large extent filled. We are now at 19,180, still up 38, 39 points. And what was yesterday's close was 19,158, and that has been briefly touched by the Nifty, and that shows strength. And now let's see whether it moves up or not. So at the moment, things look good. The first 5 minute candle has been formed, and let's see how the matter processes from now on. For the moment, let's look at the top gainers as far as the Nifty are concerned, and then we'll move to a different zone. Within the Nifty, as of now, the top gaining stock is Dr. Reddy's, 1.6% higher, 1530. BPCL, this is the second day of substantial gains, 1.2% higher, 351. Tata Motors is gaining ground, 1% higher, 635. Hindalco, Tata Steel, Bajaj Auto, all in the green. And a very, very strong advance decline ratio for the market at the moment. So this is how markets are placed. Very, very strong move coming in. I'll tell you what the top gaining index is at the moment, apart from the very strong rally that's coming. It's the Nifty PSU Banking Index, 1% higher, and the Nifty Realty Index, 1.5% higher. So again, the rally is marked into PSUs. Tanya.
Absolutely. And Mr. Kant, talking about some of the mid caps and small caps names, as Sudeep was also saying, that whenever there is a rebound, large caps participate in the rebound first, and then comes, mid caps and small caps. So, what are your thoughts and any stocks that you like from mid cap and small cap space?
Yeah, see, definitely because index, I mean, the confidence it only comes to when you see the index going up. And when the index goes up, that is only a constituent of large caps. And then the participation comes from the trading perspective into the mid and small cap. But from investment perspective, if you see a sensible market or your normal kind of a market, and then it's always a buying opportunity and doing your cherry picking out there. So mid cap and small cap has been budging, particularly the small cap space, and the numbers have been pretty good. And I think this is likely to be the case going forward for next couple of years. But where we are focusing largely is the auto ancillary space and the railway infra space. So there, I mean, RVNL or ERCOM are two good buys of a valuation multiple. If you look at historical basis, is trading at above the mean levels on the PE multiple basis. But these companies will get re-rated as a growth companies for 25-30% kind of a PAT CAGR. So then there is still scope and juice for further re-rating happening out there. So RVNL, I mean, if one is buying at current levels of around 155, 160, so 210 is the price target based on 1 year forward earnings, which we are foreseeing. And same is the case with Ircon, around 25% kind of an upside can be out there. Apart from that, you can have a look at different stocks like HAL, looks pretty interesting. And auto ancillary, Minda Corp, Minda and JBM Auto. These are the companies which JBM Auto, in fact, came out with a stellar set of numbers. And with the type of electric bus orders they are sitting on, it's likely to fire all cylinders going forward for next couple of years. So, if I compare this with Electra Green Tech, I think JBM Auto is a better play because it gives you a diversified play into the electric vehicle auto component at the same time electric vehicle in the form of buses which they have been selling. So, but these are, I mean, five, six companies which looks particularly attractive from the mid cap basket.
Okay, and what about Coal India, Mr. Kant? Because this stock has
Yeah.
been resilient, if you see, in the volatile
Yeah.
markets also,
Mm.
and this stock has been on an uptrend as well. So, what are your thoughts on Coal India?
You see, Coal India was, I mean, a surprise move, given the stock price, how they have moved. And if you look at last 7, 8 years, this was one of kind of a movement which we have seen in Coal India. And this came on the backdrop of rising power consumption across the country. I mean, 8-10% kind of an electricity growth was hardly seen if you go back 2 years and beyond that. But this is happening now, and this is likely to be the scenario going forward. But my own sense is that with imports coming into play, coal prices are has hit its maximum for Coal India, and production cannot go on ever increasing because there won't be much demand coming forward. Because the maximum coal, I mean, the power plant projects which are coming up around 85 to 90% is either solar or wind. So the ceiling for the coal consumption is almost there. From here on, what we have been advising is profit taking in Coal India. So, though there is a 15-17% dividend play out there, but I think this is the last, raw or the rally which Coal India has seen. I don't see it compounding for 5 to 10 years going forward. The only reason being that coal itself will come for lesser consumption as more and more, power capacities in the form of solar and wind takes play, and not to forget hydrogen energy coming in next 3 to 4 years. So these all will put a selling to it. So it's a book your profits. Or if you don't want, please keep on trailing your stop losses. It's a technical play now, not a fundamental play.
Okay, fair point. And let's look at a couple of stocks that are making very, very sharp moves, and these are mainly on account of a very strong earnings. KPIT first. It's a fresh high at the moment, up about 4.4%, 1237. It's the second quarter net profit of 140 crores versus 133 crores. This is a Q on Q move. And if you look at how EBIT has moved, 194 crores versus 171 crores. The margin coming in at 16.22 versus 15.64. The stock 4% higher, fresh record high. We will not be taking a technical check on this because a gap of 4% is really not something that you should be chasing already. The second stock I would like to mark is Canara Bank. We've seen a fresh high coming into it, and the level of 388 rupees, ladies and gentlemen, was seen on November 2017. So you can well imagine 3 plus 3. It's a 6 year gap. It's a 6 year breakout that the stock has seen on very, very sharp volumes. And this is how it is structured. Mr. Kant, coming to you, your views on Canara Bank.
It's a positive view and it's an accurate view which we are having because Canara Bank is the only bank in the PSU space on the large cap side, from the AUM perspective, the business perspective, which is still available at a discount compared to Bank of Baroda and SBI. And
Gautam,
the bank has been doing pretty well. I think it will get re-rated to the valuation multiple which an SBI or a Bank of Baroda is giving. So even if you give it a multiple of one-time price to book value, so but still 435, 440 is the price target, which is there for Canara Bank in the offing. So, and the numbers have been excellent. I mean, the business is doing well, and AUM growth is in excess of 15, 16%, was unheard of for PSU banks 3, 4 years back, which they are doing. They all have done the technology spends, and they all have, I mean, migrated to better technology and better kind of product portfolio. So I hope I
Okay.
am, yeah, sorry. So
Yeah, please
it's
go
a
ahead, Mr.
buy
Kant.
note, yeah.
Yeah, please go ahead, Mr. Kant. You were saying something.
Yeah, I mean, there's a buy and hold for next couple of years kind of a perspective, and decent gains can be expected out there.
Okay, absolutely got that. And fertilizer stocks, some of them are on a roll today. Look at the moves coming in on RCF, on fact, they're all up to the tune of 4 to 5% in today's trading session. Coming to you, Sudeep, for these fertilizer stocks, what's really exciting, and what are your thoughts on these fertilizer stocks like RCF and fact? Sudeep, this question is for you.
so if we see fact and RCF both, now fact is particularly more stronger than RCF because RCF in the last few days we have seen a significant correction, and today is the first or the second day of the rebound. But structurally, if we see the chart of fact, that is more promising. That has given a big breakout after a long consolidation, and I feel from the current levels, fact seems more bullish. Uh, uh, and it could move up to 800, 830 levels in the next few months. And on the downside, one could use a stop loss of 700. And if you during every correction, the stock has never broken the 200-day exponential moving average or the simple moving average. And every time it tries to retest that zone, we are seeing a big up move in the stock. So the current move also, I feel, would last up to 800, 830 on the upside, and the stock seems more stronger as compared to RCF.
Okay. Another stock that needs to at least find mention is DLF, again backed by earnings. It's the second best performing stock in the F&O space, up about 3.5% is what I see at 568, 568.40. This is how the stock is structured at the moment. As far as the open interest is concerned, it's down 0.2%. So there is a brief round of short covering happening there, backed by a strong performance. The Nifty, meanwhile, ladies and gentlemen, is now down 20 points, 19,120 in front of you. All the gap up that we saw has been filled up, mainly on account of profit booking that's happened over the last 2 or 3 days. Let us see how it moves from now on. Since the first 15-minute candle has been formed, let's look at how the structure is at the moment. The high and the low of the first 15 minutes is 19. Is 19,216, and the low is 19,146. That low has already been broken. Let's see how the structure moves from now on. But for the moment, it's stocks like Bajaj Finance, 7604, the Bombay Stock Exchange, 1937, and BPCL, 352.20. These are the ones, Tanya, that are showing fairly strong traction on the long side.
Okay, absolutely, Shell. And I think we are getting this, this query from a lot of our viewers on Bank Nifty. So let's take a quick technical check on Bank Nifty from Sudeep. And Sudeep, if you could also tell us about your prediction for tomorrow as well, because that's, one of the queries that we have been getting on a daily basis.
Uh, See, Bank Nifty right now, it's trading at a very crucial support zone now, closer to 43,000. There is strong put writing happening there around 43,000, 40 to 900 zone.